If you think about what happened this quarter, right? If you take out the credit sales, they lost about $66 million excluding credit sales. But if you also adjust for Elon Musk's stock-based comp, that's a one-time charge as well. So credit sales one time, Elon Musk stock comp one time. So if you adjust for both of those items, they did about 10 cents in earnings this most recent quarter. So if you annualize that, that's 40 cents. At $450, that means this stock is trading at over 1,000 times on a P to E basis, price to earnings basis. No stock in any technology exchange is trading at that level. What that means is investors are saying they're going to grow earnings every year on an annualized basis at CAGR at 1,000%. But if you take a step back and look at what's happening in Europe, year to date through the third quarter, European EV sales, excluding Tesla, are up 106%. However, Tesla's European EV sales are down 14%. So the market up 106, Tesla down 14. So not only are they losing share, but they're seeing their sales decline. In China, essentially their sales have stayed flat since May at about 11,000 cars. And now they're shipping cars made in China to Europe because there's not enough demand. That was supposed to be their growth market. So you have 46 new EVs coming next year. So we think that they're going to have problems, seeing the growth. And they're trading at a very high growth multiple.
Gordon, let me just play out the bullish case to you and get your reaction. The bullish case would be, sure, they get these credits right now. That those credits are allowing them or giving them runway to continue to innovate in their business to a degree, perhaps in the future, that they continue to outpace their competition, that the business unto itself should not be valued strictly as a car company. We've had people like Chamath Palihapitiya, who's a big investor in Tesla, come on the program and say, you need to think about this not as a classic automaker. You need to think about the potential for this being a major, effectively, energy company 5 to 10 years out. What do you say to that investor who's watching this morning, who thinks that?
All right, so I just want to be clear. Again, roughly all of their credit sales are to FIA or FCA. FCA has stated they're going to spend about 800 million euros through 2023 over the next 3 years. Tesla has essentially recognized all of that revenue already. We only think there's about 500 million left. So next year, they're not going to have the credit sales they have right now. They're not going to do 400 million in credit sales, right? They guided last quarter that they were going to do about 200 million in credit sales this quarter, Q3. They did about 400 million. And this isn't cash-based credit sales. This is credit sales they're pulling forward from future years. You can see their receivables are up by a similar amount. With respect to them being a bunch of different businesses, look at their energy division. Revenues are up roughly 200 million, but so is cost of goods sold. So you didn't have any increase in gross profit. Their R&D spend is not increasing as a percent of revenue. It's dropping as a percent of revenue. So the point is, we think that next year, we think they're going to go back into structural losses. And, every single question, the only question that should have been asked on their earnings call last night was, what is your credit sales in Q4? Because if it's not 400 million, if it's 200 million, they could potentially lose money. That's the only thing that matters. They are not making more money than they're selling in credit, and that's one time in nature. So I think the point is, you can say a lot of things you want to say about Tesla, but the reality is you're talking about a company that's valued at 1,000 times earnings, where you're seeing growth decline in Europe, growth has stalled in China, and overall, they're not seeing the growth they need to sow, and they're seeing significant competition next year. Keep in mind, they just introduced new guidance where they said it's going to be tough to do 500,000 cars of deliveries this year. They're saying their capacity is 860,000 cars right now. So they're not even able to sell out their existing capacity, and they're talking about ramping additional factories. Last night, they pushed out Berlin, it seems, 12 months. So I think there's a lot of problems that people just aren't focused on.
Shepard Smith here. Thanks for watching CNBC on YouTube.